So, Masja, thank you so much for taking time today and the very interesting topic to talk about, which is how this crisis is going to impact ESG. What is your view on what the COVID-19 crisis will do to the move towards greater ESG integration?
Well, I think it's really too early to tell. I mean, this crisis has just started. And first, I guess it's all hands on deck to contain it, to make sure that our economies survive. I mean, they've come to a complete standstill. I know that there's a lot of people that wish that this will mean a turning point, and I'm one of those people. But it's still quite early to tell. For me, there's not a lot of difference between before and after in terms when I think about sustainability. And what I mean by that is that sustainability is about long-term investing. It's about long-term trends. This crisis that is hitting us now is not something that we really saw coming. But when you look at for example, the World Economic Forum's risk report, which we tend to look at when we talk about long-term trends, many of the risks now are climate related. They're also social. And actually, contagious diseases was one of the risks that the World Economic Forum saw, but it was one with very low likelihood. So we didn't really pay a lot of attention to it, and we're really focusing a lot more on climate and other long-term trends. I think it's still too early to tell. A lot of people don't have the luxury of having a long-term horizon, because they're in volatile markets. They're managing a company that is hit by this standstill in the economy. Sustainable investment people do have, I think, the ability to look through this. And yes, we are still focusing on those long-term trends. So nothing has really changed for us.
You don't think that the crisis might focus clients more on sort of the social factors in sort of the S of ES and G?
This is something that we are seeing indeed. Research shows that when we look at the topics that are being researched by investors, and when it comes to ESG, we actually see a trend that they are interested more in human capital management, for example, health and safety issues, labor practices, product quality and safety, and supply chain management, for example. So we are seeing this shift now in terms of topics that are of interest. At Robeco, we tend to look at topics that are financially material in the long run, and they differ a lot per industry. Of course, banks have completely different ESG topics that are relevant when you compare them with healthcare companies or oil and gas companies. And now we're actually seeing that some of these social issues indeed are issues that are researched by people because they want to understand how their companies in their portfolio are handling these issues. For ESG investors, this has always been already a part of what we would look at when we look at companies.
Sure. And what's your sense of how ESG portfolios are performing through this crisis relative to other portfolios that maybe haven't taken full account of those factors?
Mm-hmm. Yeah, again, I think this is really too early to tell, but because we're talking about about 1 or 2 months. But and as I mentioned, sustainable investing is really long-term investing. But we do see that the ESG funds tend to be a little bit less, perform a little bit better than the regular funds. And that is also because they are not invested in certain sectors. I like oil and gas, like the more cyclical sectors that have been hit quite hard. They're more exposed to technology, to healthcare sectors that have been more a little bit of a more safe haven, I guess, for investors. What we have seen is that research shows that ESG funds have outperformed in volatile markets, also in the crisis of 2008 and 2009, and other turbulent periods like 2015 and late 2018. But what we also see is that in the long run, there is no evidence yet that sustainable funds perform better, but also not worse than traditional strategies. So I really see no reason not to invest sustainably. And if it takes you a little bit through the tough and volatile times a little bit better, then that might even be an argument for sustainable investing.
Yeah. We're talking about sustainable investing, but do you think there will be more demand or more interest in impact investing in the future, given that people will be very focused on the resilience of social systems, not just sort of individual companies or sectors, but actually whole economies and social systems around those?
Yeah, I think definitely. And this is, again, something that was actually already put in place before this crisis hit. I think when you look at climate change, for example, this is not about investing in the right companies, but it's really a systemic risk as well. So you can have a portfolio, you can do a lot of risk analysis, you can invest in the right companies, which helps you. But, if we don't solve the issue of climate change, it's going to affect everyone's portfolio. It's going to affect all economies. So I think this trend towards this systemic thinking had already begun before this crisis, and it's maybe exacerbated by this crisis. The question is, what can investors do? And where does our responsibility start and where does it end? So what we do at Robeco, we take into account ESG issues when they're relevant. We do that in a systematic way. We also put a lot of effort on active ownership, so voting and engagement. And we're celebrating our 15th year of engaging with companies. And of course, climate change has been a big part of that. So really to make sure that companies are doing whatever they can to reduce the risks there. But in the end, we need, of course, also regulators, governments, because somewhere the responsibility as an investor stops, of course, and also our influence as an investor stops.